Good morning, ladies and gentlemen. It's a fine morning. Um, it's on a Friday, um, 4th of October, and today I'm doing this video to specifically talk about something that is happening today, and this is for Forex traders, right? So, if you are a trader, when you come across this, kindly make sure you check it. So in forex trading, um, we have different types of market analysis. We have technical analysis, we have fundamental analysis, and then we have sentimental analysis. 90% of traders only dwell on technical analysis, uh, forgetting that uh, fundamental analysis is very key. And fundamental analysis, I'll assure you, these are the real market movers. This is what really moves the market. In technicals, we only look for entries, and fundamentals, they give us now the trend or the direction. And today we have one very major event in the field of fundamentals. um I'll talk more on that fundamentals when I start teaching the forex sessions after I'm done with technicals. So very soon now I'll start teaching all the topics we have to cover from basics, that is introduction, then technical analysis. um, After technical analysis we go to uh, fundamental analysis, we have risk management, we have psychology. Yeah, so we shall learn all that together. So guys, allow me to talk about this event. I'm sure even if you don't know much of it, you have heard people or these forex traders make a lot of make a lot of noise about the event. It happens each and every first Friday of the month, and the event is well known as Non-Farm Payroll or NFP. Non-Farm Payroll or NFP, right? That is the event. And NFP, it's a key economic indicator in the United States, right? Now, what does this NFP do? Okay, NFP represents the total number of paid United States workers, excluding, right? Excluding what? Excluding employees in the farming sector. In the farming sector, you can maybe generalize it and say in the agriculture, government employees, those are now the civil servants, private household workers, right? Private household workers, um, the ones maybe most of you can call them shamba boys, maids, yeah, and those non-profit organizations. We have some organizations which don't generate profits. They are there, but nothing can be seen from them, so they are as well excluded from this NFP report. um, NFP data is released by the US or the United States Bureau of Labor and Statistics on the first Friday of every month, right? It's released on the first Friday of every month, and it shows how many jobs were added or lost in the previous month, right? And this data is highly significant to forex traders, financial markets, and talking about all these forex traders, financial market is basically about what? Investors, right? Yeah. So why is this report is significant? Because it provides insights into what? How the US economy is, the strength to the US economy. And on this, when NFP is a strong NFP signals healthy or a strong US what? US economy, right? So when you see the NFP data coming out with numbers above what was estimated, that is that is a signal that the US economy is doing well, right? But I'll get into details about that as we continue. Right now, let me talk about something very important, and that is what we call the leading indicators to NFP. Leading indicators to NFP. Leading indicators to NFP. Yeah, leading indicators to NFP. These are now the things which you will have to check before NFP, and they are going to help you to trade the NFP when it comes. Like right now, towards the end of this video, I'll give my bias on the NFP, and then we wait for the news. So we have a platform where we get the news. We have different platforms. With me right now, I'm going to use one specific website by the name Forex Factory. As you can see at the display on my screen, it's Forex Factory. And also, if you check, when you come and click on the news section, you see here is everything to expect when the September jobs report is released on Friday. This was 8 hours ago, and they are trying to give something about that. So I'll go to calendar, and then we are going now to go through the leading indicators. So this has been the week's economic events, right? Maybe somebody might not understand what's really going on. You can see the news have a different what can I call them? Let's say they have different symbols or flags, right? Um, you can see we have news with the red. The ones with the red that um, signals that the news are of high impact news, right? You can just take over here. Here it's the summary. Here's the summary. Here's the summary. So high impact news. It's shown by red. Medium. We have that. Is it orange? Orange. Then we have low impact yellow. We have gray. That is now the non-economic. Same to when we have the bank holidays, and yeah, right. So now let's get into the business of the day. Let's get into what we had to check on. That is now about the leading indicators. And on Monday we never had a leading indicator. You can see the gray here, like this one. On Monday we had a bank holiday in Canada, right? If you go and check on those Canadian pairs, you'll see on Monday the pairs were very slow, and most of them were just consolidating. All right, so now let's come here. On Tuesday, we had the first leading indicator to NFP, and that is what we call the JOLTS job opening. JOLTS job opening. And JOLTS job opening, these are data which is released by the United States Bureau of Labor and Statistics. And now the report shows the number of job openings and separations, which provide insights into the labor market, right? And now, talking of job openings, maybe somebody may not understand what that means. Job openings, that is the total number of available jobs that employers are actively recruiting for. They are actively recruiting for, or they are advertising for the posts to be what? To be filled. People have to apply for those posts. In simple terms, job openings is now about the vacancies, job vacancies available, right? And then when we talk about separations now it shows the total number of workers who leave their jobs for any reasons. Maybe you can have those going for retirements, others they are off sick, others are off for maternity leaves, right? That's all about the jobs for the simple um, understanding. Now, how do you trade the jobs job opening? In the data of jobs job opening, we normally it's not only the jobs job opening, but when we are dealing with any news to deal with employment, we normally have to check on what we call the actual, forecast, and previous. Previous is the data from the previous month. Forecast is what people are predicting will happen, or analysts are predicting. This is what is likely to happen. Then the actual is now the actual data which comes after the reading, right? And you can see from the jobs, the actual was greater than the forecast and also greater than the previous. That means there's what there's lots of what there's lots of open positions, so that it's an indication that we might I've said we might have a strong NFP, but by the end of this video I will have broken down everything for you, and we are going to come into a conclusion of what we expect today. So first, for the jolts, the actual was greater than forecast. That implies a bullish dollar index. The dollar index was bullish on this. Now, the second one is right there, and that is now what we call the ISM manufacturing PMI, right? ISM manufacturing PMI, and as well non-manufacturing employment comments. So ISM simply stands for Institute of what? Institute for Supply Management, right? And ISM releases surveys for the manufacturing and service sectors. It gives those reports on the surveys which have been conducted, right? And it shows now whether employment in these sectors are expanding or contracting. And now when trading ISM, this is what you normally check for. If the reading is above 50, that indicates expansion, and if it's below 50, it indicates contraction. Above 50 expansion, below 50 contraction. So what is good for the economy? Definitely, you know that expansion is good for an economy. Why? If there is an expansion in the production, that means there's high demand from the people. As well, that means if the demand is high, the companies might uh, end up doing what? Employing more people in order to cover what? The demand, right? Then now let's check on what happened this week. This week in the ISM manufacturing, actual was less than what? Than 50. So that one implies what? Contraction, actual less than forecast, and that led to a bearish dollar index, right? That led to a bearish dollar index. That was on Tuesday. We are done with that. Now let's go to the third leading indicator, which is what we call the ADP non-farm employment change. ADP non-farm employment change. Under ADP non-farm employment change, these are reports released 2 days before the NFP. It is released 2 days before the NFP, and it covers private sector employment. Employment in the private sectors are covered by the ADP non-farm employment, right? And now when it comes to this report, that is the ADP, yeah? When it comes to ADP, as I mentioned earlier, when we are dealing with employment, we have our focus on the actual and the forecast. Actual and forecast. If actual is greater than forecast, definitely you are going to expect a bullish dollar index. And if the dollar index is bullish, we will have things like not things but XXX USDs. XXX USDs simply means any other currency and then the dollar comes as the quote, having going against the dollar. So if the dollar index is bullish, we will have something like GBP USD bearish, Euro USD bearish, gold bearish. But for gold, don't dwell much on the correlation, because gold is something which have many factors affecting its price. For gold and the US dollar, the correlation is about 80%, unlike the other XXUSD pairs. Alright, now let's check on what happened here. You can see in the ADP there is 143k, which was the outcome, against 124k, which was the forecast, and this was now a good news for the dollar, right? So in this case, actual was greater than forecast, so we had a DXY bullish. DXY was bullish. Then now let's go to the last leading indicator, that is unemployment claims, which happened yesterday. And unemployment claims, it's released each and every week. We call it the weekly unemployment claims. The weekly unemployment claims, and or the initial jobless claims. Some platforms will call it that. Another platform like this one, the Forex Factory, will call it what? The unemployment claims, right? So this one now, it is a weekly report that shows the number of people filing for unemployment benefits for the first time. So in those countries which have developed, unlike ours, if you are unemployed, the government comes in and gives aid to you. They give support. They can give support in terms of food, pay your rent, maybe pay for your insurances and many other things, right? So the number of people now fighting for this are, it's now what we refer to the unemployment claims. It's a report released each and every week, right? And in this case, yesterday we had the report coming out. The forecast was 222k, the outcome was 225k. So when it comes to this unemployment claims, when it comes to unemployment claims, what we normally check on is now the actual, and we normally check on the actual and forecast as well. But in this case, since this is unemployment, for it to be a good news for the United States, the actual must be less. So if actual comes out less than the forecast, that is good news for the dollar. But if it happens to be the vice versa, and talking of vice versa, I simply mean actual coming out greater than forecast, like what happened yesterday, that one is what? Is bad news for the dollar. And if it's bad news for the dollar, what do you expect to happen to the dollar? You expect the dollar to sell or to be bearish, and that is what happened yesterday. Actually, you can see. So now we have all the four leading indicators with us. We have all the four leading indicators with us, and you can see from those leading indicators, two were on the dollar side, two were against the dollar. So now we can come into a conclusion that is, now according to me, let's check on you are coming to here. This is today at 3:30 is when we are going to have the NFP report coming out. The NFP will be coming out at this time, right? So now this is about their average hourly earnings on that. If the employment is down, then expect the same thing to happen to the average hourly earnings. Expect it to go down, and vice versa. So my focus is now on the non-farm employment change. Previous was 142k, expectation this time is 147k. But with the current trend in the US economy, in the job market, it seems that the US job market is declining. So if the US job market is declining, we might experience a number below the estimate. But according to me, and maybe I can say experience with me in trading fundamentals, today I can expect a mixed reaction in the news. How can this be a mixed reaction? Let's check on the next one, that is now the unemployment rate. Unemployment rate has been at 4.2%, right? So for the NFP, we might see an increase. Since we have seen the ADP, there are many open positions. We might see an increase in the unemployment. So mean the news might first give a sell. The news will give a sell first, and then the unemployment rate might increase or remain at 4.2%. Unemployment rate might reduce or remain at 4.2%. So if the unemployment rate remains at 4.2%, that is bad news for the US economy. So expect the dollar to be bearish. If it goes it reduces, then we are going to have sweet sells and buys on the US dollar. Sales, I'm talking of things like gold, GBP, USD, and the rest, right? So now let's have a look on the charts. Let's have a look on the charts. So looking on the charts, this is a trade we had yesterday. When we check on things we call the chart patterns, this was a bullish flag. The market broke out, made a retest, went up. You can see currently the market is on a sell, which I don't expect it to be a long sell. I expect the market to keep on buying. Technically the market is bullish on higher time frames. On higher time frames, technically gold is very, very bullish. So I expect to see the buys continue on gold. I expect to see buys continue on gold, which might see us landing to above 2700. which might see us landing to above 2700. And if it does not happen today, it can happen next week, right? So let's wait and see how things are going to unfold. So you can see the market is approaching a very key level over here, so keep an eye at this level. You can get your buy entry. Once you get a buy entry, you can just hold that position, because what I believe and what I know is that even if the market during the news will have to sell, it won't be that long. So if you get an entry for buys, just hold that position. And what might happen before NFP? What might happen before NFP? If the market is to give a buy to this level or slightly above the level before NFP, during the NFP I can take a good sell. During the NFP I can take a good sell. But if that one does not happen, then taking buys for me, it's gonna be worth it. But for now, let's wait and see what happens. Let's wait and see what happens. London session has just opened, and I expect buys as from right here, that is 26.59, let's say 26.60. I expect to see buys to above this. This was the Asian high. I expect the market to take the liquidity over here, and yeah, guys, that's it for now. See you next time. As from next week is when I'm going to start now doing the sessions on Forex, from the basics all the way to fundamental analysis. Yeah, have a great day ahead. Don't forget to use stop loss if you are trading NFP, and don't just trade because you want to trade. Make sure you have good entries, you have confirmations before you take those trades. I'll educate you more on fundamentals when the right time comes. For now, I just did this video to address the issue and wish you a peaceful day ahead. Bye bye. Your mentor signing out.